Can I 1031 a long-term rental, single-family residential depreciation over 27.5 years into a short-term Airbnb and then perform cost segregation analysis on the new property? How does this impact depreciation recapture and depreciation schedules going forward, moving from straight line to accelerated? The goal here is to apply paper losses against W-2 income. Jeffro.
A couple things here. Yes, you can do this. There's a timing issue here that this long-term rental really can't extend into the next year because then you taint your whole short-term rental.
Good point. So a short-term rental, 7 days or less.
Yes.
And you take the total number of people that you rented to, or, what do you call it? Hosted, rented to. It's still short-term rental. But all of our guests, and you take the number of days it was actually rented and divide the number of people into that, and that will give you your average days per unique rental. If it's 7 days or less, it is not passive rental activity. It is a trade or business. You're an electrician, you're a pizza shop, you are fill in the blank, you're an active business. So what Jeff just said is, hey, if I'm a long-term rental and in the middle of the year I go into an Airbnb, I have to look at the whole year for both those properties.
Yep.
Correct?
So if you're still long-term through January, is it still possible? Yes, but it makes it all that much more difficult to get that 7-day average. Now, depreciation recapture, the nice thing about 1031 is depreciation recapture is also deferred along with all the other gains.
So, but what if and what they're talking about is when they do cost segregation, is ordinarily on a property, a long-term rental is 27.5 years. Airbnb technically is 39 years.
Yep.
And that's called straight line. Hey, I'm just divvying it up over that period of time. When I go in and cost seg a property, I'm walking in there going, hey, that carpeting is 5-year property. Hey, those cabinets are 5-year property. The appliances might be 5 years. That deck outside is 15-year property. Those shrubs and those flowers we planted, that's 15-year. Hey, that new driveway, that's 15-year property. And then I can accelerate that.
Yep.
And like this year in 2023, you can accelerate 80% of whatever that dollar amount is. I can write off right now, the year that I decide to do this, the cost segregation. Now, here's the weird thing. Because you had a long-term rental and you 1031, we have to go back to the year that I believe that one is put into service to determine what's the amount that we would get it for our accelerated depreciation, because that property would be put into service at some point. I believe that's correct, but verify. It's going to be whatever year that property was put in service. I don't think we can sneak around that fact, but it might be 100%. Like if, hey, I've had this property since 2018 and I 1031 it into a new Airbnb, which is a great idea, by the way. Like, you always want the best use of your dollars, and I don't want to incur a tax. Your basis is the amount of the first property. So when you're doing your cost seg, it's still based off of these numbers over here, my depreciable basis minus land, right? You look at just the improvement, the box that you put on that property, plus any improvements.
Now, another issue with this is, let's say I originally purchased this property for $200,000. I've had it for a while. It's now worth the basis is now about $100,000. It doesn't matter if I sold the property for $500,000. The basis in my replacement property is still $100,000.
Yep, it's whatever that was minus the depreciation.
Correct.
Like, you may be better off. Sometimes when you do these numbers, it sounds weird, but if you're going to do accelerated depreciation, you may want to consider just selling it. We'd have to look and see if you have, you might have passive losses that are from other properties or better yet, you might have loss carry forward that you didn't realize get released when you sell. So you may not have a big tax hit anyway, but depending on the value of this property, you may be surprised that you're like, it's actually called a lazy man's 1031. You might be better off selling it and not 1031ing. You may be better off saying, hey, you know what? I want the higher basis and I want to accelerate depreciation. And by the way, we can get those numbers for you before you sell, right? So you could decide, do I want to do a 1031? You could always pull out of the 1031 even after you sell. you still have these requirements. You could just say nix it, right? Give me the money, boom, everything's taxable now.
Yeah, because I might be perfectly okay with paying the capital gains on the sale, because by putting that $500,000 towards a new property, I have a lot more depreciation to work with.
And then the last line here, the goal is to apply paper losses against W-2. You're getting a tax benefit if you're doing Airbnb and you materially participate. Material participation, 7 tests. Really only 3 that we pay attention to, which is either you're doing all the activity, hey, I self-manage it, or I have other people working on it that do substantial activities, but I do 100 hours between myself and my spouse. You add both times, and nobody spent more time. No other individual spent more time. So we could, yeah. So you, and then the last one is 500 hours between you and a spouse. But on this one, because it's Airbnb, it would be only on your Airbnb property. If you're doing, hey, I want to be a real estate pro, we would actually structure this slightly differently. You'd probably sell the long-term rental. You'd get we'd want to lease that new purchase to an S or a C corp or an LLC taxed as an S or a C corp. That will be the host, so that we can keep it long if we're going to aggregate it with our other rental properties. If you just want to do the Airbnb and you're going to self-manage this and you just want to do it for 1 year or 2 years and you're just trying to unlock the tax benefit, then we wouldn't do that. Again, there's a little bit of convolution here, but people that know this stuff, they'll be able to figure it out lickety split. Like if you looked at us, it would take us 5 minutes to figure out which is the better way.
And another thing Toby reminded me of is if that long-term rental has suspended passive losses under it, I'm probably more likely to sell it, because doing a 1031 does not release those passive losses.
And now you're stuck
And
carrying them forward.
right. So I have to keep carrying them forward. But if I sell the property, I can release them, which will go against that W-2 income.
Yeah, and then I see like Dina put in there in a chat, and I saw Patty's responding. You would want to talk to a tax person. I know that there's 1031s that we already know what that rule is. We would just look and say, hey, based on your tax return, what's your loss carry forward? We'll see if they're associated with that property. We'd look at the depreciation schedule, and then we'd look at the target property and see what we could unlock there with the Cost-Seg. We work with Cost-Seg Authority. Eric Oliver over there is absolutely aces. We would run through the analysis to see how much we could unlock, and then we could tell you, here's your gain that you would have if you don't 1031. Here's it is if you 1031, which one's better for you, and it'll be looking at your total circumstance. One of our accountants could do that. I would say, I want to talk to a tax advisor. Is it tax analyst or tax advisor?
Tax advisor.
Tax advisor. You say, I want to talk I want to talk to a tax person. You're the CPA. Jeff's a CPA. I'm just a tax attorney. And frankly, some days that's even questionable. All right. What do we got? Another one. Wait. Hey, I hear, oh, gosh darn it. It's not giving me coin. Yeah. There's money out of this. So do the analysis. Do the analysis. I just suck at this. Toby. If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.